Joining us now, Jamshed Naval Cooper, the CEO and MD of Heidelberg Cement. Thanks so much for joining us, Jamshed. Overall, a steady quarter for you. Volume growth, though, slightly muted. Talk to us about that and the key factors at play this time.
Basically, you see this September quarter is affected by the monsoons. So one should expect, if it's a historical, it's this period, and this time, despite very hectic monsoons, I would say the monsoon has played strong. And despite that, we have achieved a volume. I think the industry should be doing well.
Okay, it has been very good, Mr. Cooper, to see the capacity realization for the quarter at over 80%. So how did you manage that in the face of a weakened demand environment all around?
Okay. See, the price is very much a factor of supply and demand. For our brand, at least we have got a good customer base now. The brand is a preferred brand, so the customers prefer to go for our brand, and that's what keeps our demand sustained for as far as Central India is concerned. So we are happy to, and we are lucky also that we have got a good loyal customer base which keeps tracking us and keeps buying our cement, and that's how we keep our prices and margins up.
Realizations have been firm. So, as you said, you keep pricing up. But what are some of the trends that you're looking at when it comes to pricing, particularly in Central India? And do you feel that you're bucking the overall weakening trend there?
See, during monsoons there was a weakening which happened, but I think the prices at the moment are at a level very stable prices, and I think this trend should continue in the months to come. Now the demand peak period is going to be there. So after Diwali is over, Dussehra is over, now we are entering November and December. The month should be good, and I think the prices should firm up still better.
Okay. What about input cost trends? How are they panning out? Power costs are higher this quarter. Is that something that looks like it's going to remain high going forward as well?
See, the power costs, there was a power price increase in both Madhya Pradesh and Uttar Pradesh in the month of August and September. So that has impacted a little, and that power which has increased will continue to be there. Of course, our WHR generation was low. That was mainly because the more of the heat gases, which are the hot gases, were used up for drying purposes. That's why the power generation from WHR was low. So average power cost went up a little, but yes, the power generation is now back to normal from our WHR. I think we will be able to mitigate minor increases here and there.
Now, how do you intend to utilize the benefit of the lower corporate tax rate? How have you handled it in the quarter gone by? What exactly has been the kind of benefit that you've received?
See this, we have got accumulation of MAT with us, so MAT credit is there, plus we have got some incentives. So we are not really at the moment considering, but definitely we are evaluating what is the benefit in the long run. So we have got a MAT credit and some incentives, so we'll have to balance it out and then take a decision. There is time for us. We'll do the analysis and then we'll come back to the market.
Your sales volumes, though, have come in at about 1.13 million tons, if I'm not wrong. Can you just give us an outlook as well on your overall volume growth, the margins as well that you're targeting for the company, and any sort of guidance that you'd like to leave us with by way of your revenue projections?
See, I cannot give any guidance on such, but definitely, the volumes will be better in the months to come. The prices should be firm. I think if the prices remain firm, if the demand is back, we saw a little bit of receding in demand, which the industry is facing a little tough time because of the demand situation. There is a glut in the market, but I think post November, December, January onwards, I think things should improve. Today we are almost at a margin of 23.6 last September quarter, and I think this is a sustainable margin going forward. We have done 26 till 26%, 24, 25% margins, but I think 24, 25 is a sustainable margin.
What's your outlook on the housing, demand or the housing sector as you see it? Are you seeing a pickup there, Mr. Cooper?
As of now, the housing was in the Tier 2 and Tier 3 cities. The individual household owners are definitely going for their houses. It all will depend on the farm income. This year the monsoons have been good, but the monsoon was delayed. So the impact we will see it only in the next crop. So by that time we are expecting some pent-up demand, which was because of sand shortage, things which are there. There has been a little bit of problem in availability of building materials. There was flooding in many of the areas. All that should be over. Once this gets over, I think the demand should be back. Housing sector as such, government housing sector has taken a backseat for some time. The Awas Vikas Yojanas which were there are not right now visible to us, but I think they must be also waiting for some improvement in the availability of funds and things like that. Once that comes in, I think they should improve.
Mr. Cooper, morning. Nikunj also joining in. When I met you last couple of years ago at your office, you said, look, Nikunj, we have a differentiated model, which is that we are selling cement by brand, and we think that business of ours will only grow. How much of your total business you would say is branded business, where you are getting advantage because of high quality and high brand, and what is the update there in terms of demand?
Nikunj, if you look at it, despite the depressed demand and a price pressure, we have maintained our price margins and things like that. So if you look at it, about 85% I would say my volume in central India is all branded, and out of that about 10% is 10 to 12% is in the premium segment. So that's the way we have our portfolio is at the moment geared up.
Okay, so if I have to summarize our today's interaction, can I say that because of monsoon and economic slowdown, we've gone through a bad patch of cement demand? Realizations and cost cutting have helped you, but in the second half you see expansion in demand coming through, and that will lead to your profitability and top line?
Yes, I think that is possible, depending on how the demand pans out and the government sector, because what is happening, availability of material from neighboring states is increased, and that is because MP and UP have been kept with a stable price, so these markets have become a little attractive for neighboring markets. I think when the demand in the neighboring markets also picks up, those brands which are coming to central India will start selling into their own state, and there will be a little bit of vacuum created, which will help us push up the prices a little more. So that's the hope which I have in the H2.
Them this morning and talking us through the numbers and the outlook as well going forward.